In the market, chance may give you a win, but only discipline and preparation can give you consistency. And that's exactly what separates a trader from a risk taker. Hello, traders. Welcome back to Your Nifty Guy. In today's video, we'll break down tomorrow's Nifty setup and highlight the levels you should watch closely. If you are finding value here, don't forget to like the video, share it with your trading friends and communities that you might be a part of. Subscribe to the channel if you haven't already, and let me know your thoughts in the comments below. The sole purpose of me starting this particular channel was to simplify trading for all of you by sharing simple price action concepts and setups that I have been personally using, and simple things work. People unnecessarily overcomplicate things, and that is where it leads to losses. And when you put in too much analysis, that leads to paralysis. And that is why I like to keep things simple. And I follow the one basic rule of stock market, which is markets can go anywhere, anytime. So do not predict anything, but be prepared for everything. On that note, let's start. And as usual, the video will be divided into two parts. First, we'll be discussing about what we had planned for today versus what happened in the markets and how did we play that. And in the second part, we'll be analyzing the markets for tomorrow. So let's jump straight to the charts. Uh, we had drawn this particular trend line, which was coming in and very beautifully being respected since yesterday. Now, what we had planned was to go create a long entry above this with a pullback. This was for aggressive traders. For safe traders, the entry was planned above this particular high with a pullback. Now, this particular entry would have been a good entry if we had seen a bigger gap up and market actually opening up above this particular trend line. Markets opened, I'll call this opening a flat opening, and we did get a closing above the trend line, but again, no follow through came in. The pullback came in, which broke down below the day's low, but this particular swing low, which was around the closing of previous day, was also closed by. Markets eventually went up and gave us a closing above the trend line that we had drawn. And after giving us a closing, all we wanted was a pullback, but the markets went sideways. Now, when this particular sideways price action was being created and market was not able to breach this high which was being made, I shifted my entry to day's high. The logic is very, very simple. If market would have to break this particular high after being the levels being retested or pullback being done, it could have continued the journey higher up quickly. But then only just to give a safety net to my trade, I planned my entry above this particular high. As soon as the markets broke up above this high, this was the entry candle 1105 in which I entered the market. I had placed the stop loss around here. Basically, if the prices were to retrace and go back inside the trend line, or this particular last major swing was taken out, I would have exited the trade. And markets did give me a very good risk to reward on this particular trade. I got out on this particular candle because of the exit method or the trailing stop loss method that I use. So this is a long trade. For me to exit, I use only a 5 minutes time frame for scalping. And for me to exit a trade, I need three conditions. The high should be lower than the previous high, the low should be lower than previous low, and we should get a closing below the previous low. This particular candle fulfilled all the conditions, and this is where I exited the trade, which I had entered on the 1105 candle. Now, usually I don't take a trade between 11 to 12. That is where the market is sideways. But then again, the entry was too good to be missed because of this particular sideways good consolidation, plus the markets holding up after yesterday's gap up. Now, the markets did gap up yesterday, and despite closing near day's low, the market was still not able to breach yesterday's low, and that is a sign of bullishness. And that is exactly why I planned this particular entry. And again, this the trade is right in front of you guys. Now, again, this is another level which is there on our chart since a long time, and these are not a long time, basically since the last week, post the Independence Day weekend analysis that we had done, because this is the weekly fib resistance. So obviously, this was important level. Markets took resistance yesterday. Markets again took a resistance around here. So I was planning a short entry around here. But how do you get a trade? So this was the second trade of the day for me. I had drawn this trend line, plus market was beautifully respecting this trend line coming in from the bottom. Now, markets did give a closing below this particular trend line, but again, what I was observing that this swing was not being taken out, so I waited until in the meanwhile this smaller triangle consolidation had also formed. I waited for the breakdown, the pullback, and I entered the markets around here, got out around here again because of the candle closing. It was almost a cost trade, but then again, nonetheless, a trade which was worth taking for based on the setups that I personally use. Right? We are near a resistance level, and any negative price action around that level should be taken to trade a uh, trade on the short side. Now, this trade could have been instead of taking this particular trend line, if we would have considered this as the breakdown and this as the pullback, obviously we could have gotten a early entry and we could have gotten out in good profits as well. But then it is what it is. Not every trade is going to be the same, and each trade will definitely be giving you its own set of share and of learning. But again, my only setup is in case if there is something which is forming as per the setup, you got to take that trade. Of course, you have to manage your risk and your position sizing based on multiple factors. But then, yeah, these were the two set of trades that I personally took today. One was a good profit on the long side, and the second was a short trade from another resistance level. Now, I hope I am being able to clearly explain and justify the planning and preparedness that we are doing for Nifty. And all trades are based on the analysis and planning that we are doing a day prior to the markets. And I hope the video is helping you guys as well. Do not forget to like, share, and subscribe. I'll quickly be deleting this. And this will start with the daily time frame. Now we have formed a good inside bar inside of the yesterday's candle high. Positives, the positive sign is yesterday's low has not been breached. But then again, we have not even reached the high. Plus, we are still inside this particular range of now. This is a big range, so we do not expect markets to go up and give us a closing above this immediately. But then again, this is from almost 25,000 to 25,150 odd levels, 150 points range, which is there. So we'll of course have to wait and see how exactly is price behaving around these levels. But nonetheless, we'll be planning for all possible scenarios. For safety's sake, I'll take yesterday's and today's high. Any entry above this particular level, will be planning a long trade. For a short trade, again, I'll wait for prices to go back below this, right? And I'll mostly be not be trading inside this particular range because prices are sideways and can actually continue to be sideways for a little bit longer time because it has gapped up majorly on the basis of news, which was the GST news and the meeting between Mr. Donald Trump and Putin. So market is not ready to go down. Market is near a weekly resistance. So again, it will take some time to go up above this. So we might expect some volatility around here. We might breach the lows, immediately get retraced into. So that is why we do not trade any breakouts or breakdowns without valid pullbacks. And please do not try to trade in between this range until and unless something very good happens. Or maybe you say, for example, you open your day's high, you give us straight fall, and then around these levels you form a double bottom, and then you can take a trade up. Or you open with a gap down, you breach down below this particular low, and but then again you see a trap which is happening. So all those are the scenarios only which under which you should be taking a trade inside this particular zone. Otherwise, my suggestion would be to try and avoid any trading inside this particular range. Plus, I will be keenly observing the price action inside this consolidation and not the consolidation, but sorry, wrong word, inside this particular range that we have, which is the weekly fib resistance levels. And any negative price action around here can be used to short Nifty, just like we did in today's example. Needless to say, above this, we are long. Might not be for tomorrow, but for times to come. If we are going, we are sustaining at these levels, we are maybe consolidating and maybe slightly hovering around these levels, and then we go up above this level. So this is a important weekly fib level, which if reversed immediately, try to understand something. This was 1, 2, 3, 4, 5, 6 weeks of fall. The 50.5 to 618%, this is the fib level. Point 0.5 has already been reached in the second week itself. So this is a strong bounce. So that is the reason why I am asking you guys to keep this particular level in mind, and any uh, good price action above that particular level, we can definitely look at creating a long entry. So I hope the plan of action is clear and very simple to follow. So, yeah, that's it from my side for today. I will see you guys again tomorrow post the market. Till then, stay safe. Remember, in trading, it's always you versus you. Do not focus on what others are doing. Do not focus on the profit or loss that others are doing. Always try to stick to your system, and always try to better your trading. Do not focus on the profits alone, but just focus on the setup and try to simplify your setup as much as you can, and then the profits will eventually be following you. So yeah, that's it from my side again. This is your Nifty Guy signing off for today. I'll see you guys again tomorrow. Thanks for tuning in, and cheers.